We are going to talk about earnings from one of my favorite retail real estate investment trusts, Tanger Factory Outlets. And I'm so excited about this because the three of us spent almost as much time talking about Tanger on Slack last March than we did writing.
Oh yeah, easily.
I remember messages going back and forth like $5 a share. Is this real? This is a profitable business. Like how is there a trick here? What is it? And I think we all hit the buy button simultaneously on this one. Pretty close to it.
I'm looking right now. I can't remember. I want to see what my cost basis is. I bought it a bunch of times.
I could tell mine's 583.
I don't think I did that good because I had a legacy position. So I think I'm like 11 or something like that.
And today Tanger is trading at about between $21 and $22. I don't have it right in front of me. It's up 30% in the last week. And the big reason is earnings. Tanger's earnings looked fantastic. This is better than pre-pandemic numbers. Tanger's occupancy was declining before the pandemic. Now it's finally trending in the right direction. They would have loved to see this in 2018 and 2019. Their occupancy is up 130 basis points sequentially, quarter over quarter. That means they're doing a great job of leasing up this vacant space that was left by companies like Ascena Brands, which is Loft's parent, and a few, J. Crew, all these retailers that went bankrupt and left space. They're doing a great job of leasing it up. They have a rent spread of 240 basis points, meaning that when they release it, they're making more money than they were before, which is really impressive. And get this, Tanger's average tenant is selling $448 per square foot. Wow. That is an all-time high.
Yeah, they were in the high 300s, was really good before.
Right, this is 13% higher than the pre-pandemic peak. Tanger's retailers,
Matt, that's just inflation. It doesn't matter.
Right, it's transitory, right? Traffic is unchanged from pre-pandemic levels. And this is impressive because it's without international travel, which is a big part of the outlet shopping clientele. A lot of people come over from Europe to Florida, where there's a ton of outlet malls. And the South Carolina coast, there's a bunch of Tanger outlets where I live. And international businesses, a lot of their clientele, and that's not happening now. And it's already recovered to pre-pandemic levels. This is very, very promising. They've collected 98% of the deferred rent from the pandemic. Core funds from operations translates to a 39% dividend payout ratio, which they just increased their dividend. And I bet you there's another one coming in another quarter or two. Yeah. Oh, yeah. It's not quite at pre-pandemic levels, but the stock yields 3.4%. So it's a pretty nice dividend stock, even after the increase. And they raised their full year guidance by 9% at the midpoint for funds from operations after this quarter. This business is just surprising a lot of people. I don't think it's surprising the three of us as much as the general investing public, because we looked at that $5 or whatever share price last year and said, are you kidding me? You have to buy this. What do you guys think?
It's at least at the time, I know when we were discussing it, it gave the appearance, or it was being priced as though the business is worth penny on the dollars. It was going to get called on debt and was probably going to have to sell assets or something to, or maybe even some sort of restructuring, Chapter 11 or something like that. The way that the market was treating this stock, and I think the one thing I do remember looking at it with the three of us and saying, well, interest coverage is still there. So if they're paying their debt, like debt holders can't like call you on your debt if you're paying your interest. And as bad as it was, there was still some wiggle room. And so, I think that was the position I looked at it originally. Today, as happy as I am, I and pleased to see what's going on.